Thank you, everybody, and big shout out to the people who managed to stay until the very last slot of our 2 days event, both online and live here at the Hilton. There were 2 days with a lot of discussions, a lot of debates about various utilizations, use cases of cryptocurrencies, from what seems to be the most talking about nowadays and the most, how should I say it, acceptable use of blockchain, which is CBDC. When I say acceptable, I mean acceptable from the perspective of the traditional finance. So companies and representatives from the traditional finance, they are okay to talk about blockchain as long as we speak about CBDCs. But they're less okay to speak about cryptocurrencies and in particular cryptocurrencies as a mean of payment and respectively as an investable asset. Well, for the last discussion of our today's event, we are actually gonna tackle this very part of digital assets. Yeah? Maybe less the part of digital assets as a mean of payment, because that was also discussed in the last day, actually. But more about digital assets as investable assets, with obviously, risk opportunities they bring. And just to be clear, I'm not thinking about digital assets just as cryptocurrencies, but also digital assets as NFTs, which are also viewed as investable assets, and any sort of tokens that people look into as something they could invest in. Sure, with the risks that this could bring, and it was interesting in the previous panel, which was focused on payments, that one question was raised: how do merchants deal with volatility? Well, what could be a curse for a merchant, which is volatility, could be a blessing for a trader. Traders like volatile markets, right? They like action. That being said, I'm going to ask each of the panelists to very briefly introduce itself. I'm saying very briefly because we ran very much out of time, so we'll have to keep concise this panel. Apologies from my end for this time pressure. Professor, first.
Yeah, Alfred Taudes, Vienna University of Economics and Business and Austrian Blockchain Center.
Hello, good morning. My name is Carlo Moretti. I'm the chairman of OVERDROID. We are a metaverse company creating next generation blockchain video games.
Hi. I'm Sergiu Vasilescu, managing partner of VDLAW Group. We are a law firm focused on new emerging technologies.
Hi everyone, I'm Stefan Tanase, Senior Tax Manager at JASILL Accounting Businesses, also colleague with Sergiu.
My name is Boabes. I'm an entrepreneur and involved in mobile payments since 2002 and in crypto since, 2014.
Thank you. And we also have online Andrei Popescu. Andrei, I'm not entirely sure from which location you're joining us.
No worries. I'm calling in from Singapore, and my name is Andrei Popescu. I'm representing CEOSCX Holding, which is an alternative asset management company. We evolve in the space of financial digital assets. Our main focus and business model involves trading assets, specifically crypto assets, and we emerge into this space using different machine learning adaptations to create automated trading strategies.
Thank you, and glad to have all you here. With your permission, last on the list, Andrei Burz-Pinzaru, partner with Deloitte, actually Deloitte Legal, Reff and Associates. I'm just an old-fashioned banking and capital markets lawyer in this area for more than 20 years, and since 2018, also serving clients in the crypto sector and testing the waters by investing myself. Good, so we have academics, we have asset managers, we have angel investors, we have lawyers, tax advisors, and an entrepreneur from the gaming industry. I'm going to pick on you, being probably the less obvious choice for this panel, but again, everybody thinks about cryptocurrency trading. Much less people think about trading NFTs, especially NFTs not just for speculative purposes, but NFTs because you may enjoy the use of the benefits they give to you.
Yeah, well, absolutely. I think that what is happening in gaming is a turning point for the industry. The gaming industry is subject to pivotal changes since its very beginning in the 90s. We have witnessed the massive change from PlayStation 1 to PlayStation 2 to mobile gaming. And what is happening now with blockchain technology is basically the opening of the Pandora vase as far as the secondary market for in-game assets is concerned. So as of today, the gamers, they spend impressive amount of hours training their characters, leveling up their weapons, playing with their friends. They even spend absurd amount of money, honestly, like thousands of dollars for enjoying their time, and they do it with no problem because they really enjoy their time. What the problem here is that the gaming company, they don't allow them to trade those assets. And if you think of the fashion industry, the car industry, it would be like preventing from the existence of the vintage market or the used car market. So basically what NFTs do here, they bring the gamer the opportunity to monetize from his ability to play. The gaming industry today is much like the financial industry. If you look at those YouTubers that earn from their ability to play, it's less than 1% of them, and they actually earn because of huge marketing contract with sponsors, and so it's not really them being good at the game. So the NFT here enters into action, and it allows for the tokenization of the characters, the weapons, and whatever is inside the game, and eventually allows the gamer to make a profit from his ability to play, and maybe, you know, not enormous profit, but just, you know, the opportunity to spend the weekend out, or, you know, purchase a piece of cloth or something like that. You know, we're not talking about anything crazy here.
I find this type of asset particularly interesting because it's you know, it's a response to one criticism that's addressed to digital assets, right? People are saying they're not backed by anything. Well, at least these kind of tokens, yeah, they are backed by very concrete things like access to services, okay? So in this case, people could buy those tokens either because, you know, they want to play a game, or they want to have certain features that the game provides, right? Or simply because they believe other people may want the same benefit, so I can buy it and sell it to somebody else. So there you go, you may have, you know, a clear-cut case of token which has an underlying concrete basis, right? Maybe, you know, moving a bit ahead from this towards asset management, right? Because Andrei, I think, you know, you are involved in that, and on one hand, it could be relevant to ask you from my perspective, how do you deal? Because volatility was mentioned, and, you know, regulatory threats were existing for a long time, and we thought, I think 5 years ago, there were still rumors that states will ban whatever type of digital assets and so on. So my question is looking from this perspective, how do you relate with your investors? You know, people who may trust you with their funds in terms of dealing in cryptocurrency markets. I mean, how are they looking at these elements? Are these threats something they care of? Are they simply gambler type of profiles? Or are they people that also look in, you know, have a broader view on this?
Yeah, that's a very good question. So the investors' behavior in terms of financial digital assets has changed a bit. The average investor that is looking to diversify their portfolios and looking at the crypto assets per se are those type of people that are actually in touch with what's happening in the technology field. they like innovation, and they're willing to take the risk. So you were saying about volatility. Volatility, especially in this type of markets, is not really such a bad thing. And we have been talking, and even the previous panels have been talking about driving or achieving mass adoption in terms of crypto assets. Well, let me tell you one thing. The investment procedure, the investment structures have not changed. They're all the same. We are not reinventing the wheel. Everything happens in the same manner. But crypto assets have really become, or they reached that point where they can be considered an alternative investment option. And for the last, let me just put it like 2 up to 3 years, traditional investors from asset management companies and investment banks, all sorts of trusts have been dealing with crypto assets, have been involved in the space. And if you are looking at the charts recently, let me give you a piece of advice. Everything is correlated, which actually brings this to another discussion in terms of we wanted institutional investors to participate in this marketplace. We wanted them so much. Now we have them. So as you may know, the economic environment it's quite interesting at this stage. We are dealing with a lot of risks. We are dealing with a lot of crises. We are dealing with an inflation crisis. We just passed the COVID period, which was like drastic for all of us. We have a food crisis, which is knocking at our doors, and of course, not to mention that we have climate crisis. So all these things wrapped up together, they create a perfect storm in terms of economical and financial features. So the crypto markets as an investment structure somehow correlate with what's happening now in the traditional finance world. In terms of risks and things that investors are looking at, it comes down to the way of investing. So they are like, within the last period of time, I'm quite sure you are well aware, there have been many vehicles of investment from different ETFs to trust funds, and of course the old traditional way of actually going down the rabbit hole and taking your own wallet and venturing into different crypto exchanges. So these things are happening. I believe there are things to be learned in terms of what's happening in the DeFi space. There are new risks that we need to be aware of. And this type of conferences and exactly this type of discussion that we're having, they should be well received by everyone, because we should use all these vectors of communicating to educate people with regards to investment options, with regards to risks, and of course, educating them on what crypto assets are all about and how they operate.
Thank you, Andrei, for the substantial intervention. I mean, the fact that two thoughts came into my mind listening to you. One is you talked about the need for educating people, and that reminded me the surprise I had years ago when I first started to follow people on what's called crypto Twitter, right? And I was amazed about the quite massive volume of discussions about macroeconomics. I mean, way more discussion about macroeconomics in that space versus what I see in normal media, for example. And I was like shocked, because I thought, this is pure gambling and I shouldn't be here. So that's one idea, and that makes me want to turn to our professor here, speaking of education. But I also have another thought came into my mind listening to you, and I'm sure you guys can recognize what I'm going to quote, or I'll try to quote. Fugazi, Fugazi, it's a Wazi, it's a Uzi. Remember that? It's from Wolf of Wall Street, yeah? And there's the broker there saying to the young apprentice, forget about it, it's an illusion. We just, the only people who really make money out of this is us, the intermediaries, who take our cash and get home with that. So you have two conflicting ideas here. Yeah? On one hand, the idea of super aggressive speculative environment with some people making money and other people obviously losing that money. But you also have the idea about discussions about macroeconomics risks, correlation between the markets. You just said, institutions enter the market and then their behavior vis-a-vis risk on, risk off appetite translated into the crypto markets, and the correlation increased. So on one hand, speculation, on the other hand, education. How does a university professor relate to these two extremes? Let's say, not extremes, two facets, I would call them. Yeah.
Well, let's start with education. Anytime I hear this funny statement that there is no underlying value of cryptocurrencies, I really think I heard it a lot of times and it never was true. The real problem is that people only look at cryptocurrency and think everything is the same. In fact, every type of token has a different underlying economic model, right? The stablecoin is something totally different from a utility token, something totally different from a security token. And people...
By the way, new words appear, like tokenomics,
Tokenomics,
right?
Yeah. And they all have sound economic models. The problem is that people from traditional finance only know their classical assets, like a bond or a share. And they think that everything must have dividends to have a value. But of course, there are very sophisticated models where you really have good models to explain the value of a utility token, because it depends on the network effect. The only point is that it is monetized in a different way. So Facebook monetizes the network effect by taking our private data and giving it for advertising. A crypto network takes fees, gas fees and other things, but the basic mechanics that the value is driven by the network effects, basically, empirically you see it from the number of active wallets, and these models fit quite well. Of course, we still have substantial shocks in the system, mainly because regulatory insecurity. So you have a lot of shocks, but if you look at the adoption curves, they're quite okay. The point is, people who say there is no underlying value is, they come from maybe the traditional economics, right? Not from the digital economics, and they don't understand these different types of tokens. And stablecoins, of course, are a very tricky thing. When I showed the Luna model to my colleague from monetary economics, he immediately said this doesn't work. Yeah? And this is another point. It's very hard to get traditional economists interested in the new space, because they are still locked in their old things, and the new space doesn't know the traditional economic things, so a lot of stupid things happen. And that's why I founded this research institute on crypto economics, to bridge both things.
Yes, and you have my admiration for that, for bringing the study of this new economy in universities. I think that's really remarkable. And by the way, speaking about the various models, I mean, I had a very interesting chat with Carlo from OVERDROID before this. I mean, unfortunately, we're not going to have time to go into detail, but I really like that example of, building an economy within the digital space. And that's something that people, when they first look into it, they don't get it. They don't understand what it is. But it is a reality, and people want to make payments in virtual assets, want to receive virtual services, whether we like it or not. And it may sound crazy, but probably the same type of craziness would have seemed to other people 15 years ago, when we would have said that the whole, huge part of the commerce is going to be done online via internet, right? I still remember there's a famous article, I don't recall, I think it was Forbes or something, where some famous analyst said, no, that's impossible. Why? Because you won't have the seller-customer experience, yeah? Well, people don't seem to care that much about it when they buy online, guess what, yeah? So maybe going a bit to another type of participant, I would say, to this market, and I'm talking at your perspective as a miner, but also as angel investor. How do you look at the trading part of this?
I'm not necessarily looking at the trading part. I'm looking at the I'm trying to have a macro view of the things. I'm starting with the question, what's a crypto asset? Because I think we should have started the discussion with this question, what's a crypto asset? If we talk about, I don't know, tokenization of equity, this is a crypto asset. We talk about traditional financial instruments that are tokenized, so we have a very narrow border between traditional financial instruments and the new financial instruments, that is the crypto world. Although there is a very large gap in value between the crypto market value and the traditional, we talk about 1 to 100 ratio. In the next years, as an entrepreneur, I'm looking at medium and long term directions. We'll see this gap being much narrower, because you'll see tokenization of real estate, you'll see tokenization of equity. This will bring higher value into the crypto world, and will bring a more mature market. We'll not look into speculations, we look into more stability of the investment. And Andrei was mentioning correlation. I think maturity of crypto will be achieved when correlation metrics between the different crypto products will have lower figures. Currently, if Ethereum is down, you will have LTC down, because there is a correlation figure of 0.82. When Luna is down, you have everything down. So we'll find ourselves in a much more mature market when the correlation matrix will look different than it is currently. So that's my perspective, so I'm waiting for that moment.
Very, very interesting. And actually, again, we don't have time to go into details, but the idea that tokenized stocks, for example, tokenized shares, would change something about how the stock market works, I mean, that's a very interesting idea. Because prima facie, you look into it and say, you know, it's the same thing, it's just with a different representation and a different settlement technology and so on. On the other hand, other people may say no, because of the blockchain and so on, you could have actually faster execution in transaction, ultimately faster velocity of money and so on. So I'm not having arguments really to support one or another views, but that sounds like an interesting idea. How about how do tax advisors and legal advisors, I mean, you've been working with a number of enterprises in this space. What's your feeling in terms of the complexities that blockchain companies or blockchain projects have to navigate in Romania and elsewhere?
So, as lawyers, you know that the answer is always, it depends. So the main problem is that everything in this area is moving very, very fast, and they are fearing of missing something, and clients must understand that they need to wait to put all the things in the right shape. And we have kindly a big overview of this industry, working in 12 different jurisdictions, because we used to go with the client in the jurisdiction which is able to offer them the best legal framework for their activity, even if they are both exchanges, for example. And they firstly need to find the jurisdiction which is able to deserve their interests and how they want to, let's say, shape their activity. And on the other way, they also need to take care about how they plan and how they structure the financial part, because even if it's a very good team with very, very good intentions, with amazing business plan and an amazing technology, if you don't, and if you avoid putting all the things relating taxes in the right shape, you will finish by spending the investors' money on fines, on other things like this. So it's very important to find the jurisdiction which is able to deserve your interest, and then to try to accept those limits, because now we must fit in the legal framework, and we must accept that the technology is 10 steps before the legal framework, and we need to accept those limits, because we always discuss with our clients why we can't do this, because from the technical point of view, it's possible. I can do this, I can exchange, I can send. Why I have to check, for example, AML or KYC for an investor who wants to buy assets for $1 million, for example. And I think that they need to have to take their time in order to put all the things in the right shape, and also to have a very deep understanding of the applicable tax regime.
I would add a bit to that from my own experience. I think the investors in this area are a bit at disadvantage. Why? Because they are usually very young, and they come from what we call unregulated industries. So they haven't worked in banks, non-banking financial institutions, insurance companies, or capital markets firms. And therefore, they're not really familiar with the level of compliance that may be applicable to them. And I emphasize maybe, because it's not always, and that's important part of the lawyers to advise their clients how to structure their business, if possible, so that they don't fall unnecessarily under certain regulations. However, as you correctly pointed, if they do fall under certain regulations, they're definitely better off knowing that early and being as compliant as they can early. How about tax?
From a tax perspective, I think that there are not enough laws or regulated enough.
I would say there are too many laws.
Not in this space, not in this area. And we have to provide our clients their best options in terms of the laws that we have already. So even if they may do something, we have to prevent that in the future there will be no law that will tax them even more than even did it before.
That would be an ideal scenario. Unfortunately, we also cannot know what the governments will do. Yeah? There are limits to what us as advisors probably can offer. Maybe one thing, just my observation, I'm not a tax advisor, but I do work a lot with Deloitte Tax on various types of projects, including in this space. And what I notice quite often is people saying, I've heard there's a better legal or tax regime in whatever jurisdiction, and we're going to set up our company there. And one thing that people usually forget is that in order to get a tax treatment corresponding to a certain jurisdiction, you have to have substance in that jurisdiction. Otherwise, you may not benefit on that, and on the contrary, the tax authorities in your home member state, whether it's Romania or whatever, could come and say, guys, this is your actual place of management and we're going to tax you there. So also a bit of cautiousness, I would say, in terms of the more aggressive tax planning. As I said, we are going to close the talks today, so I will just invite each of you, starting from there, maybe a final thought after 2 days of the event, and where do you think is this industry, if we call it an industry or new economy, going forward?
There have been 2 very intensive days, and I congratulate Sergiu for organizing this event. I think what we have achieved is a better communication between all the players in this domain, and it's not brainstorming, but brainstorming helps achieving better results and having a good direction. I think even socializing, networking around helps us understand all the challenges that we have with our projects. And I think we have to have much more such events because we are more sincere when we are outside the mic and we can say about all the problems we currently have, if they are legal, if they are technical, if there are other types of problems.
Fully agree. Please.
Okay, from a business point of view, I believe that this crypto domain, this the industry that you tell it, should be more approached by the entrepreneurs, and they have to be educated in this way, because they are very scared of not knowing information about the payments, the way you can do things in this crypto world. So yeah, let's educate more.
Thank you.
I'm happy, and my point of vision is regarding the last few years, because after this conference, I can conclude that now we have banks here with us. Within them yesterday, trying to obtain the diploma for the most innovative business or biggest acquisition or facilitating something in this blockchain and crypto industry. So now we have banks next to us. They are more open to accept blockchain-related transactions or cryptocurrency-related transactions. And we are in a good point, but we are still the beginning. So we now wait for all the projects to prove utility, because this is what we need. Excluding the payment system and the payment industry, we don't have projects with real utility in place. And I think this year and next year are the years in which we have to see the utility and the results of their work from the past years.
Thank you. Marco?
Yeah, first of all, since we are closing the ceremony, I just want to say that I was really impressed by the level of expertise from Romanian startups and entrepreneurs in crypto. So I really wish that the strong ties that there are between Italy and Romania can cultivate further in crypto specifically. And to answer your question, I think that what we have witnessed since the last Bitcoin halving, as well as the hit of the pandemic in March 2022, was a growth-driven market, mainly characterized by a huge arrival of the millions in terms of users and a huge flow of capitals into the industry. This is, of course, being very good in terms of those that were building products, in terms of making the headlines. But what is happening now today, I think we are in a value-driven market. So I think that what will happen now is we will see some few but really good winners. I talk about gaming. You will see that they will come out like 10, 20 global players, might be horse racing, strategy games, car racing. So you will see that now that the capital has flown into, there will be some teams, not all of them, I think a slow part, a tiny part of them, but they will deliver. So I think this value market is really interesting, so we should just be open and yeah.
And let's hope OVERDROID is going to be one of those. Professor?
Yeah, you all said very intelligent things, so I don't have to add something. I just want to close with fun. I've seen that the Imperium index is continuously going up. So supposedly all that we have said it must be true. And it will, if it continues like that, we will meet next year here and everybody will have a Lamborghini.
Great one. Andrei? We haven't forgot you.
So, thank you very much. First of all, allow me to congratulate the organizer on this fabulous event. I'm quite sure all the discussions were very interactive there. And as I was telling you earlier, I believe very much that this type of events help in educating people, in trying to breach those access points for them to learn more about how they can invest in this type of alternative assets. And again, we need to emphasize on the risks, very important, because we are dealing in an unregulated environment, and to reach that point where regulation, a regulatory framework can be achieved, and that, of course, will help all the participants to this ecosystem, we need cooperation, and cooperation between the regulatory bodies and the participants, the actors, and everyone involved with it can happen only by such events and by talking openly and freely about what's happening and how we can make this a more fruitful, not only an asset, but a technology from which we can all benefit. Thank you.
Thank you. Very nice words and very wise words from everybody. I will just conclude by just saying my view in terms of what we'll see ahead. I think there are a few very clear things that we know will happen, and there are many others that we don't know about. One thing is the wave of regulation. It's clear it's coming. It's both in US and in Europe. In Europe, MICA has been so much debated. I'm not going to enter into details, but there is a wave of regulatory framework that's going to impact the entire market, and I think initially the impact is going to be a bit tough for some of the players because it induces a certain level of compliance. Compliance means cost, and especially for entities which are not used to deal with compliance, it's problematic. However, in the medium to long term, I think it will actually benefit the industry because apparently there is a lot of money sitting aside and not entering the sector exactly because of lack of regulation or because unclarity of regulations. So that's one aspect that, in my view, is very clear is happening. The same is on the other part of the Atlantic. We know they're also working heavily on regulations. And then another thing that is very clearly in the making is the CBDCs. It's, just Google whatever you want about CBDCs and the most important organizations and central banks of this world, and you'll find they all have something to say about it, and there are a lot of projects ongoing. And somehow I believe that the confluence of these two things, on one hand, the central bankers tapping into this, and on the other hand, the normalization from a legal perspective, which, by the way, may not always be positive, let me emphasize, but it normalizes the discussion. Yeah? It makes it less awkward. It makes us look less exotic when we speak about it. Yeah? I think both of them will ultimately benefit this new segment of economy. In terms of how will this manifest beyond the digital asset sector, I think, to me, that is the most interesting part, and life will show the interaction between digital assets and the real world going forward, and I think we should look forward to see it. Thank you, everybody. Thank you, Sergiu, for organizing this no cash events, and all the sponsors and participants, and have a nice day.